Now let's move to Berjaya Corporation background. Berjaya Corporation group of companies began in 1984 when Tan Sri Datuk Sri Vincent Tan purchased a Berjaya Industrial Berhad from its founder. The company was officially listed on the Bursa Malaysia Security Berhad in 1969. The group is a diversified entity engaged in various core business such as hotel, lottery, property investment and many more. Moreover, the company nature of business is investment holding and provision of management services.
Pbl Corporation vision is to be an organization which nurtures and carry on profitable and sustainable businesses in line with group diverse business development and value creation aspiration and interests of all its stakeholders. Besides that, Pbl Corporation also want to be an organization which maximize the value of human capital through empowerment, growth and commitment. Pbl Corporation vision is to strive to generate profitable returns for their shareholders from investment in core business activities by providing direction, financial resources and management support for each operating unit through dynamic and innovative management, teamwork and a commitment to excellency. By providing a cross-functional environment and development and upskilling opportunities for their employees to develop their full potential.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Nura Amira Amni Mutamazha. So first, I will present to you about the organization chart. As per shown that Tan Sri Datuk Sri Vincent as the executive chairman, and they had chief executive officer, non-independent non-executive director, and independent non-executive director with a fellow 4 executive director.
Assalamualaikum and hi, my name is Nurhan Sofia binti Rasnan. So for today, I would like to present about the liquidity ratio. First and foremost, the current ratio. Based on the table above, the current ratio for Berjaya Corporation in the year 2017 is 1.09 times, and it was increased in the year 2018, which is 1.13 times. Meanwhile, in the year 2019, it was decreased to 1.11 times. The current ratio in the year 2020 of the company is better than the previous year. It indicates that the company could survive the claim of short-term creditor that is covered by current assets. It means that the firm can pay RM 1.24 cents for RM 1 ringgit of each short-term liability. We can see that Berjaya Corporation have a good performance in 2020. But in the year 2021, the current ratio for Berjaya Corporation dropped significantly compared to year 2020, which is 1.01 times. Next, the acid test ratio. As shown above, the acid test ratio in the year 2017 for Berjaya Corporation is 0.89 times. Meanwhile, in the year 2018 and 2019, the acid test ratio decreased from 0.79 times to 0.71 times respectively. But in the year 2020, the acid test ratio increased, which is 0.90 times. In the year 2021, the acid test ratio for Berjaya Corporation is decreased compared to year 2020, which is 0.70 times only. Finally, in this ratio, we can state that the years 2020 have better liquidity position compared than previous years.
Now let's move to activity ratio. The first ratio is account receivable turnover ratio. We can see from this ratio analysis that the ratio increased between 2018 and 2019. The fact that the company received payment for its debts demonstrates that it is in a good position because this boosts its cash flow and enables it to pay the business debt faster. However, the ratio decreased from 2020 to 2021 in Berjaya Corporation. It indicates a decline in account receivable, which is bad. The business must therefore continue to make investment in the other sector. The company's effective management of its account receivable can therefore be inferred from the higher turnover. Next ratio is inventory turnover ratio. For inventory turnover, we can see that the company did well in 2017, achieving 5.79 times. In 2020, the company has an excess of unproductive stock because it has the lowest amount over the previous 5 years. Inventory turnover in 2020 will be lower because this company employs a low risk strategy, as there is a low likelihood of stock out to meet production and sales demand. We can conclude that the company's stock is profitable in 2017.
Hi, Assalamualaikum. My name is Fatina Najwa binti Muhammad Zaid. I will present about the leverage ratio. This ratio is to determine a company's capacity to meet all of its financial responsibilities. Also, this ratio aids in determining the mix of a company's operational expenses. So, if a corporation has a highly leveraged balance sheet, it signifies that it has more debt than equity when compared to comparable companies in the industry. When a corporation is highly leveraged, the financial risks grow, but so do the potential returns. So, based on the calculation, the debt ratio for BJ Corp is rising from 2017 until 2021 indicates 49.76% to 55.73%. This means that the higher the liabilities, the higher the credit risk for the firm. Therefore, BJ Corp give more loan than it has in deposit, whereby it will be low maturities and rate sensitivity of liabilities that affect the market interest rate and movements. Next, table above shows that the debt to equity ratio which the company needs to bear is higher than the previous year. That means the year 2017 until 2021 is the year that the firm is close to bankruptcy, or in the other words is higher risk. Therefore, the performance of the BJ Corp from the year 2017 to 2021 is bad, which increased from 99.02% to 125.90%.
Net profit margin ratio shows that the company performance was increased on 2017 until 2018 with 3.46% to 4.22%. This determined that they gained more profit and had better control over their costs if compared to other competitors. However, on 2019, BJ Corp net profit margin decreased drastically to 1.24% and continued dropping until 0.9% on 2020. Next, they secured the company performance on 2021 with an increase towards 6.12%. Return on asset will reflect on Berjaya Corporation Berhad's asset return, where it will compute the efficiency on which asset generate income and shows their capacity into keeping up the cost to be under control. So from the ratio, appeared that BJ Corp performance was increased from 2017 until 2018 with 1.41% and increased to 1.73%, but decreased from 2019 with 0.60% and continue falling until 0.31%. However, it did increase towards 2.20% on 2021, which I believe their best return on assets ratio performance was on 2021, as it can be concluded that the higher the return on assets, the greater for the company in earning profit through less investment.
Let's moving on to the comparative analysis of year-to-year changes for the Berjaya Corporation balance sheets from 2017 to 2021 can be seen in the table above. Firstly, for the year 2017, The total assets from 2016 to 2017 has shown changes as much as negative 7.832%. The development properties also showed an increase by 15.46% in the year 2017. In addition, the total equity has increased by negative 2.15% compared to the previous year. The reserve in the total 2017 show an increase of 9.39%. The total liabilities have increased negative 12.91% in the year 2017. Secondly, for the year 2018, the total assets from the year 2017 to the year 2018 showed a slight increase by negative 3.27%. For the inventories, showed a significant increase by 52.53% in the year 2018. However, the total equity has dropped from negative 2.15% to negative 4.56% in the year 2018. Compared to the previous year, the long-term borrowings have shown an increase of 8.55%. For total liabilities, we can see that the total liabilities in the year 2018 increased by negative 1.98% compared to the preceding year. Thirdly, for the year 2019, the total assets for the current asset shows a slight increase of negative 4.97% compared to the previous year. For the property, plant and equipment in the year 2019, the non-current asset increased by 0.56% compared to the previous year. Furthermore, the total equity in the year 2019 has slightly decreased, which is negative 4.48% compared to 2018. In the year 2019, the treasury shares showed an increase of 1.73%. The total liability for the year 2019 have increased from negative 1.93% to negative 5.43%.
For the year of 2020, the total asset from 2019 to 2020 have shown an increase of 7.95%. This can be reduced by looking at the non-current and current asset item in the table above. Next, the tax recoverable also show a significant increase from negative 8.14% to 28.43% in the year 2020. For the equity side, we can see that the total equity in the year 2020 has slightly decreased by negative 2.27% compared to 2019. This can be interpreted by looking at the equity items for that current year. Moreover, the total liabilities increased by 17.81% in the year 2020. This can be reduced by looking at the non-current and current liabilities items. For the taxation, show a significant increase by 5.11% compared to the preceding year. The liabilities directly associated with disposal group classified as held for sale in the year 2020 has shown an increase by 56.14%. Lastly, for the year 2021, the total asset from 2020 to 2021 have dropped significantly by negative 6.15%. For this justification, we can look at the current and non-current asset item included in the table above. The other investments show a significant increase by 52.40% in the year 2021, and the other long-term receivable also increased by 36.49% compared to the previous year. Moreover, the total equity has dropped significantly by 6.75% in the year 2021 compared to the preceding year. This means that for the equity side, we can also interpret by looking at the items in the equity. As we can see, the total liabilities have dropped significantly by negative 5.67% in the year 2021. This can be explained by the items in the non-current and current liabilities.
For the year-to-year change in income statement, I will start with the changes in revenue. Berjaya Corporation are having a up and down trend for revenue where in 2017, Berjaya Corporation increased their revenue by 1.84%. However, in year 2018, revenue dropped as much as 5.63%. 2019 show a remarkable performance compared to previous year because Berjaya Corporation managed to increase their revenue as much as 30.02%. In 2020, the revenue began to drop again to 28.60%, but in 2021, their success to increase their revenue by 6.79%. As for percentage of changes in gross profit, it is declining on 2017 and 2018, where 1.13% in 2017 and 6.16% in 2018. However, in 2019, the changes is positive, 6.92% compared to previous year. Year 2020 shows the largest negative changes, which is 30.74%, while the year for the 2021 showed the biggest changes, which is positive 8.87%. Change of profit before tax also declining on 2017 and 2018, where negative 125.59% in 2017 and negative 82.51% in 2018. 2019 is the only the year where the changes of profit before tax is positive, which is 65.45%. In year 2020 and 2021, change of profit before tax is negative 65.71 and negative 2.79%. Overall profit for year 2017 is negative 171.09%. In 2018, changes show a positive change, which is 15.26%. In 2019 and 2022, changes of overall profit is recorded as negative again, which is 133.22 and 174.98%. However, Berjaya Corporation managed to increase their sale in 2021, where the changes is positive 40.66%.
Common Size Analysis balance sheet shows the company on steady state from 2017 until 2021. Firstly, their non-current assets. Pbl Corp property, plant and equipment was unstably performed. It was started to fall towards 16.62% on 2018 from 17.29% on the past year and rising on 2019 but decreased once again on 2020 with 14.80% from 17.56%. Hence, Pbl Corp property, plant and equipment increased on 2021. Secondly, their current assets appear that they are decreasing, moved from 2018 until 2020, that mostly recovered on 2021, such as Pbl Corp deposit with financial institutions that steadily rising on 2017 with 2.95% to 3.47% on 2019, but drastically fall until 2.39% from 2020 and recover back on 2021 with slight increase on 2.77%. The 5 years movement of Pbl Corp total equity was steadily decreasing because of company equity movement that growing slowly or drastically decline that affect the company total equity. Next is non-current liabilities that mostly consistent dropping every year, which resulting a better financial performance in their balance sheet, as the company total assets are not solely dropping every year. For example, Berjaya's long-term borrowings are steadily decreasing, started from year 2019 with 17.62% to 13.30% on 2021. Lastly, their short-term borrowing of current liabilities shows a steady declining in the performance from 2019 until 2020 with 15.37% decline to a 10.73% and gain recovery on 2021 by 11.68%.
Common size analysis income statement. The gross profit in 2017 represent 30.28% of revenue, which is the greatest percentage over all the 5 years, from 30.28% in 2017 to 26.40% in 2021. The gross profit is falling annually. This is a result of the fact that the cost of sale is rising annually from 69.72% in 2017 to 73.57% in 2021. Berjaya Corporation operating profit is experiencing a downward trend with the proportion falling from 10.91% in 2017 to 1.22% in 2021. The highest operating profit percentage was recorded in 2017, which is 10.91%. Berjaya operating profit before tax is also experiencing a downward trend, with the proportion falling from 7.22% in 2017 to 3.49% in 2021. The highest operating profit percentage is 7.22%, was recorded in 2017. As for profit after tax, the greatest percentage is 6.12% in 2021. Berjaya Corporation also having a big pattern up and down for the profit after tax, where the profit after tax is decreased to 1.249% in 2019 from 4.22% in 2018. However, they are able to improve their profit after tax from 1.24% in 2019 to 6.19% in the 2021.
For the recommendation, it can be seen from liquidity ratio, debt post-current ratio, and asset test ratio had a relative performance. The worst performance of liquidity ratio was on 2021 because the company received the lowest percentage between the 5-year moving ratio performance. This to show BJ Corp needs to consider in enlarging their investment for the business to possess and adding the group. This is to keep a steady cash flow to accompany financial. For the activity ratio, where the performance also steadily increasing and decreasing every year, shows that the business strategy need to be changed and improved because of the instability. In 2021, the account receivable turnover had the worst performance, where the company need to begin to focusing on estimating their cash flow for the next few years to plan a new and better strategy. Inventory turnover ratio was decreasing from 2017 due to drop signal in the market demand. To improve the performance, BJ Corp need to adjust their costs, instead offer incentives to deserted the inventory rapidly. From profitability ratio, the company performance on net profit margin is the poorer because it had the most unstable movement. This growth ratio required to be higher or perform the same as previous year from the company, indicating that their business is doing well. The recommended solution is lower the cost of their production. This step should be implemented by the company without risking their quality in works, as the profit that they gain from sales revenue every year would decrease. Profitability ratio measure on how the company maintaining and controlling their costs without lowering the company chances in receive a high profit every year. The low performance of return on asset also should be considered by BJ Corp because of the declining movement every year to preserve their costs on production. However, it is encouraged for the company into rising the price on the products or services they offer. Leverage ratio of BJ Corp can be concluded that they possess a high percentage of debt in the business. This is an observation for them to reduce the consumption of debt to avoid it become higher than their assets. This action will lead into reducing their profit rate and volatile their earnings due to the repayment of existing debt each year. If the company debt high, it may overweight the return that company generates to investment or any business activities that could possibly bring bankruptcy to them.
Overall, there are few elements we can study and interpret from the result by looking at the financial ratio analysis, common size and comparison analysis of Berjaya Corporation organization. From the perspective of the company liquidity, we can say with certainty that Berjaya Corporation liquidity position is strong enough. The activity ratio reveal how effectively Berjaya Corporation management is handling the asset. The company annual changes in liability are consistent decreasing, but the equity side is not performing well in 2017 to 2021. In terms of managing its debt, Berjaya Corporation is still doing well in general. But based on the profitability ratio, we can conclude that Berjaya Corporation company profitability is weak. As the firm current asset rise, the Berjaya Corporation maybe think about reinvesting some of those funds into expansion of its operation. Berjaya Corporation is poor in collection of receivable account. The inventory turnover ratio is also decreasing annually. So in the conclusion, we can say that Berjaya Corporation company is not a good company in managing their finance.